Hi guys, welcome to another honeystocks.com weekend analysis for the 28th of March 2020. I think first things to say is congratulations to everybody that got in and obviously bought the discounts and the incredible move that we've obviously seen to the upside this week. It's not a move that I've personally participated in. There have been a few trades here and there this week that have not been in US equities, but I think something that I think most technical analysts are in agreement with is this is typical behavior of what we see with bear markets. And obviously the environment that we're currently in is a very challenging one. I think that's maybe the first thing to kind of start off with. I'm going to be getting into a lot of charts again this week. I think I've probably got about 15 or 20 charts that I'm going to walk through with you. But one thing that you have to bear in mind, guys, is it's very normal for the market to rally 15-20% when we are in a bear market. The market's been massively oversold. It stands to reason that we would anticipate a little bit of a bounce. I think just to clarify my position, I know last week there were some short positions that were obviously communicated. I am still bearish on the overall market. I do feel like there's a bit more downside, or at least a retest of the previous lows. But as always, I am going to back everything up with charts, and hopefully you get a bit more insight to this. If you don't make it to the end of today's video, please stay safe out there. It's obviously a very challenging environment. I know that it's now starting to hit the US now. The UK has been on pretty much lockdown for the last 10 days, 2 weeks. So, yeah, please look after one another and stay safe out there. And let's see what the charts are saying this week. Now, as always, guys, there's a switch up in audio here. I've switched over to my microphone, so apologies in advance for any distortion with the audio quality. Now, as always, please pause the video, make sure you're comfortable with that before watching any further. Just basically says there's not any investment advice and don't listen to a word I say. For those of you that don't know, I'm registered with the CMT Association. I'm working my way towards my chartered status for technical analysis. It's something that I'm widely known for across the world. So hopefully that gives a little bit of credibility for those of you that are just new to our channel. And if you do get value from it, please do like, subscribe, comment. It all helps with the YouTube algorithms, and it would be very much appreciated if you do get some sort of value from this. So you're all here for the charts. Now, what I would say here is I'm not using any magical hindsight indicators. Everything that you're going to be watching today, individual stocks, the overall market, it's all for the next week, maybe the next 2 weeks. So I'm trying to obviously project what's potentially looking to happen in the future. Now, a logical place to start is with the overall market, and I'll just touch on this for a couple of minutes. Now, we've obviously had a massive rally to the upside over the course of last week. Now, what we have to bear in mind, guys, is that when we enter into a bearish environment, and make no mistake about it, we are still in a bearish environment at the moment. It's very typical in a bear market to see 15, 20, sometimes 30% rallies before we start to tail off again and obviously see further downside. Now, the question I'm getting a lot this week is this the market bottom? And the short answer is nobody knows. Economists don't know, technical analysts don't know. But the one thing that doesn't lie to us is price. And when we look at the Dow and we observe what's happened here, we were with that RSI momentum, we were clearly in an oversold environment. So it stands to reason that we do get a little bit of a bounce to the upside. And that's exactly what we've got. Now, I'm watching key levels and using Fibonacci to see where we're likely to get a rejection of price before we fall away again. This is what technical analysis does. Some of you will believe in it, some of you won't. But again, these patterns, these levels of interest are all very, very relevant, and I can't explain why technical analysis works. None of us can, it just does. But I think we've got a retracement to the 38.2% level. Now, we also understand that the 200 period weekly moving average on the S&P 500 is incredibly important as well. And I was watching this last week with a lot of interest. Lo and behold, on Friday we rallied and we got a rejection right at that 200 period weekly moving average. Now that's quite significant for me. And for those of you that have obviously followed the channel for a while, you'll understand that this is obviously the chart that I've had in place for quite some time. And it was a chart that's obviously enabled getting defensive ahead of time before the big drop that we've seen. And again, that's something that technical analysis helps us with. But we've had a rejection here. So I think at the moment, unless price proves me otherwise, if we get a move above this level, then absolutely we can probably look to start buying stocks. But at the moment, I still consider us to be in a bearish environment. So if we're in a bearish environment, where should we be looking? Now, obviously, every stock, every position that you look to take in the market, I would hope that you do your own due diligence and you're managing risk correctly, because risk management, risk allocation is absolutely the most important thing at the moment. We've obviously entered into a highly volatile period. We're seeing big gaps overnight, etc. So if you're taking positions in the market, maybe prior to the market close, you need to be very comfortable with the risk that's attached to that, with the gap risk that we're obviously seeing. And I would suggest that given the relative outperformance of tech over the last 5 years, that if you are looking to initiate in the market, it would make sense to focus on the areas in tech that are leading, that are showing the strength. Yes, there will be a time where you can, buy up all the beaten down discounts, and I'm sure there's many of you watching this that bought the massive dip that we've seen and have had an incredible week, and I couldn't be happier for those of you that did. But I think when we understand that tech is in this massive uptrend, and that uptrend has not been broken despite the crash that we've seen recently, it makes a lot of sense that this is an area of focus that I think we should all be concentrating on. Now, I've had a lot of questions on gold after my bullish call on gold a few weeks ago. For those of you that are maybe new, as we were seeing this decline here, I had this support level in place and basically just said that I think the smart money is likely to start allocating around here. That's exactly what happened. And we've had this huge rally to the upside. So for those of you that are out there and are asking about gold, I think you need to pay close attention now to this $1,700 level. I think that's a level of interest. I think if you get into this level, it might be an idea to start tightening up stop losses if you're not starting to protect profits already. As a long-term hold proposition, I think gold is probably an area that you would maybe want to consider at the moment, especially if we see further volatility in the equities market. Now, with that said, that's all I really want to touch on with the overall market. So I have 25 individual stocks for you and individual charts. Now, what I would say is, because the market is obviously it's delicately poised, I think would be the words that I would like to use. Given that we can move higher, we could also move lower. I have a mixture of stocks where we could potentially look to be bullish and others that we would potentially look to be bearish. And some charts are both bullish and bearish. And hopefully this will be a new one to many of you, but it all comes down to preparation, guys. You need to be able to adapt to the overall market environment. It's not just about your individual stock. Yes, we all know the stocks that we know and love and we want to buy them, but sometimes it doesn't make much sense to buy them when we're in a declining market. So hopefully this makes a lot of sense for you. Big one over the course of the last week is obviously Apple. I think we're at a very key level of support resistance for this stock. We've obviously, when we had the decline, we retraced to the 61.8 Fibonacci retracement. Again, I don't know why it works, but Fibonacci is massive. And we've had a monster bounce. And I think if we move above this level here and we start to move above 257, 258, I think you can start to be bullish on Apple. It does look like we obviously had a Friday rejection there, which is obviously a bit of a concern. But, you know, as a long-term hold, Apple is obviously an incredible company. I like their products as well. But, you know, if you're looking to trade it, maybe you're trading options, you know, you need to be very, very selective on where the optimal entries are. Now, for full disclosure, this is a position that I currently have open at the moment. I thought I would share it with everyone. Now, United Rentals, we obviously had a huge rally last week. Now, I obviously take the view that this is a company that is it's not going to thrive in the current economic environment, shall we say. So I made a decision to take a short position on this, just as it approached this Fibonacci level, and lo and behold, we got a huge decline on Friday, and it's off and running. And I think if we can drop below this $85 level, I think stands to reason that this is likely to go back and retrace towards $60. So I'm watching this level at 85 with a lot of interest. If we get a rally higher, then absolutely I will look to just just remove my position from the equation, not take any chances, and just say thanks very much, Mr. United Rentals, and on to the next one. So United Rentals, I think, makes a lot of sense to the downside, but you know, as always, do your own due diligence. Starbucks is obviously rallying. I think obviously Bill Ackman is you know, on record as having doubled down on his position in Starbucks. For those of you that maybe don't know who Bill Ackman is, he made a $27 million bet and turned it into $2.4 billion on the decline that we've just seen. But if you look further into that, you need to understand as well that that incredible play that he made, which was basically an insurance policy, that incredible play that he made only covered his losses on his equity position, his long equity position. So, you know, Bill Ackman has doubled down on his losses, dollar cost average down. It's a massive gamble. He's obviously staked his reputation on it, and you know, I'm not going to argue with Bill Ackman, but I'm not so confident that Starbucks at the moment is a good play. Yes, it obviously has rallied, so I'm assuming he's doing okay at the moment. But I think this is the level to pay a lot of interest to, around $75. If you get a rejection here, then it's likely to fall away. So if you're in Starbucks, just pay attention to this level here. It might be a level where you might want to consider tightening up stop losses. And if we break above this level, you know, I'll be the first one to go back into Starbucks, because it's a stock that I've done very well on in the past. Twilio, again, this is one of those that can absolutely go either way here. I think bullish above $100, and I think below it, it's one of those that may struggle. Obviously, software, tech, it's an area that you want to be focusing on. But you know, you just have to understand and trust what price is doing, and I think a break above $100, and I think we can be bullish on Twilio there. Potential failed breakdown in Disney. We know with failed breakdowns we can get fast aggressive moves in the opposite direction, and that's kind of what we're seeing here, possibly with Disney. Obviously great company, massive hit, you know, financially, when we look at obviously the economic environment at the moment. But again, price doesn't lie. So I think if we're above this level, I think you can continue to be bullish on Disney. But if we do start to see further distress, I wouldn't be looking to take any chances if we drop back into this level here. Getting asked a lot about airline stocks, as you can imagine. I think with airline stocks, we have to understand that although yes, I understand that, especially in the US, that they're a bit of an institution. Nobody's going on flights at the moment, and yes, I know there's talk about bailouts and the government propping up the US economy for the time being, etc. I know all that, but I always come back to the question when I'm asking is are the airlines going to suffer more? I think it can be answered by the question, are people going on flights? And they're not going on flights. So if they're not going on flights, where's money coming from? So I think there's still a bearish case to be made for the airlines, unfortunately. Um, and yeah, I think any rallies that we have here, we can clearly see that the rally was sold into, and we've obviously rejected quite hard, especially on Southwest Airlines here. And I think if you drop below this level here, around if we drop under $36, I think it's a very valid short, and I think you can probably take that back to 30, possibly further if we see further signs of distress. Again, American Airlines, and certainly we've had a huge rally and it's been met with a further decline. So yeah, I think that's my position on the airlines. I think all we've seen is a bit of an oversold bounce, and I think when we understand that we get those rallies, those rallies are often short lived, and we see further declines. And if you're out there, I apologise in advance. I'm not trying to add to anybody's distress with airlines, etc. Roku, again, looks like we're in a bit of a range here at the moment. Huge rally, rejection at $100, perfectly normal, very logical. So I think if you're out there, I think above $100, I think we can be bullish on Roku. But at the moment, we're in this bit of sideways. What happens from here? Do we go higher or are we going to go lower? If we go lower, I think you can probably short it. Amazon, obviously incredible company. I'm still using them at the moment, and we had a failed breakdown, rally to the upside. It's one of those areas, going back to the chart that we've seen with the triple Q versus the S&P 500. It's an area of the market that's showing relative strength. So if you're out there and you're looking to maybe buy discounts, maybe you're looking to get in on some good companies, I think companies like Amazon make a lot of sense. I think Apple makes a lot of sense as well. Obviously, I've touched on that chart already. The likes of Microsoft, Netflix is obviously doing very, very well at the moment. I don't know about you guys, but I'm absolutely fascinated with Tiger King at the moment. It's been an absolute lifesaver for me because I'm incredibly bored at the moment. We are on lockdown in Scotland, and I think with Netflix, their subscriptions are going to be going through the roof, and absolutely, I think above $400 would make a lot of sense. I think we're obviously in a bit of a sideways chop at the moment. We've obviously had a big decline recently, but Netflix, I suspect, might be one of those that does pretty well in the current environment. EHTH, again, I highlighted this one last week, and I'm highlighting it again this week. I think a breakout above this descending trend line would certainly make a lot of sense to me. So if you're out there and you're looking to get in on EHTH, I think that's a level to pay a lot of interest to. Wynn Resorts, this is a stock that a few of our subscribers and clients are short on at the moment. Last week I provided a chart. Well, this is actually the chart that I provided when it was down here, just saying, watch out because we're going to get a rejection at one of these levels. Lo and behold, we got a rejection here, which would make it a valid short below $80. Obviously, casinos, hotels, etc. are not going to thrive in the current environment, and certainly Wynn Resorts is one of those that it rallied hard, but like I said, downtrends work exactly the same as uptrends. We get these pullbacks and they offer opportunity in the trend direction, and that's what we've seen here, and that one's off and running for many of our subscribers. Zoom, love the product. I've had experience with it in the past myself. And I think that this level, I think provided that we are above this level here, we should be looking to be bullish on Zoom. So that's a stock that I think you can probably add to your watch list. I think bullish above $150. Shake Shack, obviously restaurants, etc., are obviously in a lot of distress at the moment. Again, price doesn't lie to us. Very, very clear support level was in place for Shake Shack. It's a level that you would expect to get a bit of a bounce. That's what's happened. I think if you're looking to maybe sell into the strength, I think that would make a lot of sense, because again, I don't see Shake Shack getting a bailout, etc. And it's just unfortunate. I've got friends in the restaurant business, and I hope they all come back to what they were a few months ago. But again, I think below $30 would make a lot of sense as a short. If you break below $30, it's going to be a big problem for Shake Shack. Tesla, I've been asked about a lot this week. We've obviously had a huge rally to the upside. Again, oversold bounce is the way I look at it. I think this is a key level that we need to pay a close attention to. I think if we break below $500, then that's a big problem for Tesla. So maybe you've bought the dip here in Tesla, and maybe you've got the long-term view, the investing mindset. Totally valid. I love Elon just as much as everyone else. But I think, if we're playing it technically, if you are maybe swing trading or using technicals to facilitate better decisions, I think you need to be very careful if we break below $500. But I think you can be bullish above this level down here. McDonald's, again, one of those very similar to Shake Shack. I think we can be bullish above 171. And obviously below 160, I would suspect it's probably going to fall away and potentially go and retest the lows there. Again, McDonald's is not a company that's going to thrive in the current environment. Again, I think Shopify would make a lot of sense. I think if we are above the $400 level, this seems like it's a key level of support and resistance. Obviously, we've got the 200 period weekly moving average as well. So I'll be watching this with a lot of interest to see if we come down, we get a bounce here off the 200 period moving average. But again, I think as long as you're above $400, I think you can continue to be bullish on Shopify. Now, I think with Teladoc, this is something that obviously there's a few companies that are kind of bucking the overall market trend at the moment. I think Teladoc is obviously one of those that no matter what the market throws at us, it's in a bit of a volatile uptrend. Now, for those of you that are maybe out there and you're in Teladoc, there's something kind of going on under the surface here. I just want to draw your attention to this. Now, this in itself isn't a sell signal. It's not saying to you, let's just exit our position and let's take profits. But when we have declining momentum and rising price, it just tells us that there's something going on under the surface. And divergence is obviously a big issue when we see it in uptrends, because quite often we can just see price fall off a cliff and everybody's left sitting there wondering why it's a great company but it's falling. Why is it falling? And price doesn't need a reason to fall. I think when you understand that like I said before, price doesn't lie and price just is. Price is telling us just to be careful at the moment with Teladoc. So if you're out there and you're in Teladoc, be very, very careful, because we do have something brewing under the surface with price. Team, obviously it's held up incredibly well. It's been in a sideways range now for quite a few months. So if you're out there and you're in Team at the moment, I think this is a level that you might want to pay very close attention to. I think even if you get towards $150, you might want to consider just tightening up stop losses. Obviously a breakout above would offer a new entry, But the key thing to realise as well is it's still in an uptrend. It didn't reach oversold conditions with momentum. Now, JP Morgan, obviously financials, beaten to death recently, and I'm watching this level around $90 with a lot of interest. Obviously rallied hard, but key, it fell away on the weekly chart, and we're still closing below this level at $90. So I think you can still be bearish on JP Morgan. Yes, financial institution, company's not going anywhere. But again, sometimes it doesn't make sense to own these stocks, guys. Microsoft, this is one that a few of our clients jumped in on this support level. It's obviously doing very, very well. Again, I think you can still continue to be bullish on Microsoft. Going back to what I said previously, you know, that you want to be looking for the strength in the leaders, and I think Microsoft is certainly one of those. Micron Technology, it's obviously had a huge bounce to the upside. Again, I'm just kind of watching these levels here just to see where it retraces to. And if we move above this level at 46, I think we can be bullish on Micron. But I think if we break back below $42 here, again, I would be looking to go short on Micron Technology. Universal Display Corp. So I think there's only a few more charts to go. I think with Universal Display Corp, we obviously have to understand again that we've had a huge decline. Again, it's oversold, bounce. What happens here? I'm noticing, you know, positive divergence. So I think if you're out there and you're looking to get into OLED, I think this level here would make a lot of sense to keep an eye on. This level around 143, 144. I think if we get a rally to the upside, then you know that would certainly be looking to offer opportunity. Square Inc. again, I'm asked about this one what feels like 100 times a week, and I think with Square, again, it's very, very similar to a lot of the charts this week. There's obviously key levels here that we need to pay attention to. Yes, we've had a rally, but I'll be watching this level around $50 with a lot of interest. I think we can remain bullish above $50, but again, below it, you know, you might want to consider starting to cover, maybe take out insurance puts, whatever your method from profiting in the market is. But these are the levels that I'm paying a lot of attention to. Visa, again, I'm looking at this and seeing and noticing rejections of key price levels. I'm also noticing that we're in a bearish momentum environment. We've obviously had, you know, huge above average volume on Visa recently. Again, just thinking about things logically, I mean, is anybody out there spending money at the moment? Is Visa making any money from fees? I'm not so sure about that. So I think this is one of those stocks that will suffer again in an economic environment that we're currently in. So you know, I think we've kind of got to be bearish on Visa at the moment, and you know, I'm not saying that doesn't make it a great company. It's obviously a great company, but again, price doesn't lie, and we're looking at $170. We've had a rejection, so that's known as polarity. We've had breakdown, retest. It looks like we're probably looking to fall away there. Again, very similar to Yeti Holdings. Breakdown, retest, fall away. Again, bearish environment. So I would suggest that Yeti is a stock that you don't really want to be owning at the moment. Zscaler, rejection. This is a logical level of resistance. It's obviously rallied massively to the upside here. I've had a lot of questions as, you know, why is it rallying? What's going on with Zscaler? And I don't know. That's the short answer. I don't really know much about the company. I obviously just follow the technicals and price. We've had a rejection at key resistance. So I'm going to be watching this level here with a lot of interest around $53. I think if we get a bounce to the upside, I think that probably offers opportunity to get in and obviously get that optimal entry. And again, just be aware of the danger zones. I think if we break below this level, then it's probably a valid short to the downside. Alibaba, obviously understand that the Chinese tech stocks, etc. I mean, I've actually built an index with China tech. I'll maybe post it to social media later, actually. But I think Alibaba is obviously one of those huge sideways holding pattern at the moment. That's not a bad place to be if you're out there and you're in Alibaba. It is showing a bit of relative strength, you know, when we compare it to the overall market that's obviously down, you know, 30%. So I think if you're out there, I think you can still continue to be bullish on Alibaba. It's holding up pretty well here. You know, very similar to the likes of Apple, Amazon, Microsoft that I was touching on before. CGC, I know quite a lot of the weed stocks this week. I think Tilray, good old Tilray, had a monster move. And I think what we're seeing here with CGC, I think we're still in a bearish downtrend, but there is an opportunity if you're out there and you're swing trading. You just need to be aware of maybe this pattern here. You know, we're just chopping sideways up and down. So if you're out there, I think it makes a lot of sense to just kind of play it that way. And obviously a break to either side, you'd either want to go long or go short on CGC. IQ, interesting. We know that the 200 period moving average on this one is key for the stock. I mean, you just need to look to history here to see how many times it's obviously played a part in the direction of price. Looks like we've had another rejection here with IQ. I think a break above it, you can be bullish, and I think below it, I would expect it to come down and retest the lows here at 16, which again is obviously a key level of support for the stock. So, you know, if you've not got the 200 period daily moving average, you need to add it to your chart and just keep a close eye on it. And last up, we've got PayPal, good old PayPal. Again, very, very similar to Visa. You know, I don't see where they're making all their money. We've had a rally, met resistance, a logical level of resistance, $100, psychological round number barrier, and you know, we'd be looking for potentially come down and retest the levels here around 82. One thing to note though, it hasn't reached oversold conditions, which is pretty remarkable. So again, if we move above $100, I think setting a price alert for around $101, and you maybe be looking to buy it if we were to break above that level that we seen down there. So if you've got value from that, guys, and you know, maybe you struggle a little bit with your analysis, you might want to stick around for a couple of minutes, but because we do have an offer on at the moment. But please do subscribe, give it a thumbs up, you know, comment if there's any charts that you want for next week or the week after. You know, feel free to let me know in the comments, and I do try to reply to everybody. So if you are somebody out there and you are struggling with maybe technical analysis, maybe you're struggling with, you know, performance, maybe the current environment is very, very difficult for you, we do have a membership at honeystocks.com. We've got an annual subscription, and I'll walk through exactly what that provides, and I'll actually show you, so excuse me, the performance and, you know, the charts that we provide our clients and subscribers. But you get 1 year access to our premium weekend charting analysis. You've got our trading ideas. You get 1 year access to our trading community. We provide bespoke charting requests. So if you need a second opinion on a chart, I'm always on hand to provide my own. But I think the reason why everybody's signing up at the moment is we're currently giving away full access to our technical analysis program, and we do charge a lot of money for that normally. We are fast approaching our 200 members limit. I think we're up to about 175 now, so there is still 20-25 membership spots open. So feel free to register your details below. But I'll just show you exactly what you get, because I get a lot of questions asking me, well, Sam, you've got all this free stuff on the internet. Why would I want your premium stuff? And I think that the one thing that I would like to just kind of pass on, I think as soon as we reach our 200 members limit, I'm probably going to step away from a lot of my social media stuff. But this is a typical trade alert. So this is stock ENPH. I think this ended up $65. We obviously placed a trade alert for it at 24.25. There's very, very clear instruction. This is a bespoke charting request for HIIQ, which was a massive, massive winner as well. So we do these types of, we have this all included within our membership. And for those of you that maybe don't know, but on my website, I publish every single trade idea that I have provided our clients and subscribers, and I've done that over the last 3 years. Now, I don't know anybody else that does that. Now, what I would say is that is there as a tool for you to see the types of stocks that we are recommending. If you're someone out there and you've got a minimal trading account, and you're not able to maybe afford the types of stocks that we are obviously recommending, etc., then it's probably not going to be a place for you, unfortunately. But we do provide full transparency with our trade ideas. We update them every single month. Obviously, I'm getting a lot of questions at the moment, why am I recommending stocks at the moment? And the very simple reason, I'm not providing trade alerts because of the high volatility and the gap risks that we're seeing. That doesn't mean that our clients aren't profiting and doing well. They are. And I think when we look at, some of the results over the last couple of weeks, I mean, this is Michael. He's finally made it to 6 figures on his account. We've got 10% rise in their overall account over the course of a week, $5,000 profits. We've got Elliot there with his options doing very, very well. Again, $15,000 profits. So that's what we do at honeystocks.com, and it's not just about the trade ideas and the alerts. I think most of you that follow my work and have done for any significant periods of time, a lot of you will have saved retirement accounts, your trading accounts, based on the analysis that I put out there a month ago. And that's what we do at honeystocks.com. It's not just about profiting, it's also about understanding when to get defensive ahead of time. And again, if you're not familiar with my work, go back to just prior to the market crash that we've seen and have a look at the videos that I was putting out there. There's a lot of learning to be had from it. But I think if you're out there and you're maybe someone that is looking to move away from day trading, we're not day traders at honeystocks.com. Our typical hold period is weeks, sometimes months, depending on the trend of the stock. But if you're trying to fit trading around a career or a business, and maybe you want better consistency, etc., we're probably somewhere that you would want to kind of align with, because we do have a logical approach. So, the question is, if you're open to learning a new way, feel free to register your details below. And, we might be the place to kind of hang out. But, if you stuck around to the end, thank you from the bottom of my heart for watching. But please, please, please do stay safe out there. It's a very, very challenging time at the moment for absolutely everybody across the world. And my only hope is that you stay safe and the markets come second to your own health, your family's health, etc. So thanks very much for watching, and maybe we'll pick up with you soon. Thanks.